Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Big deal. President Trump teases a major announcement later today, expected to be a trade deal with the UK. Chip flip. Sources tell Bloomberg the Trump administration plans to rescind Biden-era AI chip curbs and won't enforce the so-called diffusion rule, which takes effect next week. And no rush. The Fed holds rates, with Chair Powell making clear that they will not be pushed into lowering borrowing costs. Meanwhile, the Bank of England is expected to turn dovish and cut later today. It has just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. As ever, lots of headlines coming through from Trump in the last 24 hours. But I'm going to start with the Fed and what we got out of the Fed Chair Jerome Powell, because the theme was there is a lot of uncertainty. Inflation is still high, and therefore we're not really in that much of a hurry to cut rates. And what was the reaction to market? Stocks up, bond yields up, and also dollars slightly up as well. So that was the reaction on back of the Fed. But then, of course, we started getting those headlines through on trade talks, with the China-U.S. trade talks beginning this weekend in Switzerland. So that's going to be a major market driver over the course of this coming weekend. And then also the story that we broke yesterday, Bloomberg News, suggesting that the Trump administration is thinking of dialing down some of those curbs on chip exports. So could be a major development for some of the names like NVIDIA. It rallied more than 3% after that news came out, in anticipation, of course, of Trump's visit to the Middle East next week, where that has been one of the points of discussion as well, exactly what those chip restrictions are going to look like. So all of that news to contend with. This is the board behind me. Futures are up 0.8%. NASDAQ up 1% as well. Some of the chips doing quite well there. The Bloomberg USD is slipping a little bit today, so lost some of the ground that it gained in yesterday's session, so down about 0.2%. That continues to be a major theme. Greenback losing its ground versus other currencies has been the major story the last couple of months. And then two-year yields, take a look at where we're at now, 3.8%. In terms of what the market is pricing in, 76 basis points worth of rate cuts until the end of the year. That was 85 basis points yesterday. So we've unwound some of the rate cuts that had been priced in. But it's not just the Fed. They're not the only game in town. We've got plenty of other central bank meetings to watch out for today. One of them is the Bank of England. The cut for today is fully priced in. And as you can see from this chart, there are about 90 basis points of rate cuts priced in. So a bit more than what the market has penciled in for the ECB and the Fed. Slightly more aggressive easing cycle because of concerns about the growth outlook. So our Lizzie Burden will be covering the Bank of England and expectations for that during the course of this show. So stay tuned for that. But let's get back to trade talk discussions. President Trump says he will announce a major trade agreement later today. And sources tell Bloomberg it's expected to be with, drumroll, the UK. The agreement is likely to be a framework that will serve as a starting point for further negotiations. Meanwhile, Trump says he is unwilling to preemptively lower tariffs on China in order to unlock more substantive negotiations with Beijing on trade.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
For more, let's bring in China correspondent Minmin Lo. Minmin, okay, so we know that these talks are going to begin this weekend, direct talks between China and U.S., so that is a positive step. What are the expectations out of these talks? What could it lead to? Are we on the path towards a trade deal, or just perhaps a pause and an exemption similar to what we got with other countries?
Yeah, that's the thing. It's been really confusing to dissect through some of the comments from the Trump administration, given the sort of hot and cold vibes we got from Trump. There you heard just now the very resounding no in answer to the question of whether he will lower tariffs preemptively. He also previously said that U.S. wouldn't lose very much if China doesn't trade with the U.S. But meanwhile, you have Scott Bessent saying that everything is on the table and that the tariffs are unsustainable. Trump also denied denied that the U.S. had been the one to initiate these trade talks, even though China had explicitly said it was the U.S. that had been reaching out to China through various channels. So at this point, it is not clear whether this is going to be a sort of icebreaker talk where both sides try to get a sense of what the other party wants before agreeing to more substantial trade talks. So the sort of negotiation to agree to negotiate, or is it actually going to be something that will yield some sort of concrete outcome, which could look like maybe a pause, as Trump has done for other countries on the reciprocal tariffs, or perhaps a lowering of tariffs? Then the question then is, how far will he lower the tariffs, especially given that economists have said even a 50-60% tariffs is still going to cut off most of the trade between U.S. and China. And China repeatedly had been calling for the U.S. to remove all unilateral tariffs. So a lot of question marks as we go into the weekend.
Yeah, and of course, trade deals take time. According to reporting, to our own reporting as well, there will be a major trade deal announcement later this afternoon. If it is indeed a deal between U.S. and U.K., worth also just reminding viewers that those discussions actually started back in 2020. So it takes a long time for two countries to get to trade deals. Let me ask you about something else, though, Min. The other big story overnight, we're seeing a big reaction in chips, and the reaction in chips has been quite substantial this morning. But the Trump administration is actually looking to rescind some of those chip curbs that were put in place in the Biden era as part of a broader effort to revise some of these semiconductor trade restrictions. What does this mean for the chip sector as a whole and into Trump's visit to the Middle East next week?
Yeah, so this is in regard to that AI diffusion rule that the Biden administration put in place in his last few days in office. It divides the world into 3 different tiers with different levels of export restrictions, and the intention at the time is to prevent China from being able to skirt around the rules and get hold of advanced chip technology from the U.S. through other countries. But now the Trump administration is saying the entire framework is too cumbersome, is too complicated. They're going to simplify it, so they're not going to implement that come May 15, but they are still going to look at ways to restrict, especially those countries that are seen as potential gateways for China to get chips. Places like Thailand, Malaysia are likely to still get some level of strict restrictions when it comes to chips. And of course, China is the center of all this, but they're looking at some ways to perhaps address some of the collateral damage to some of the other countries that have been friendly to the U.S., especially some of these Gulf countries, as you said, ahead of Trump's trips to the Middle East. UAE is one country, for example, that is planning over $1 trillion in investment into U.S. tech and infrastructure. So again, a lot of uncertainty as they rework what the new framework would be like, because it's not necessarily a loosening. It would just take a different shape and form. But certainly we did see the likes of some of these chip makers really rallying, because NVIDIA had been one company that was strongly opposed to this. He had said that it could backfire on U.S. chip companies, and that the Chinese market actually represents about $50 billion in revenue in the next couple of years. You already had to write down about $5.5 billion when Trump had banned the sale of the H20 chips to China.
Yeah, as we covered extensively at the time. Min, thank you so much for the reporting. Bloomberg's Min Lo. Well, Fed Chair Jerome Powell says officials are not in a hurry to adjust interest rates until they have a better understanding of where tariffs are taking the U.S. economy.
There's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that.
Joining us now is Craig Chan, head of global FX strategy at Nomura. Okay, so the interest rate markets were very quick to price out some of the interest rate cuts that have been priced in for this year. We're now looking at around 75 basis points worth of cuts, so 3 as opposed to leaning towards 4, I would say, a week ago. Do you think that is the right interpretation of what came out of the Fed's presser yesterday?
Well, I mean, we have seen the repricing coming out actually over the past week or so, even before what we heard from Fed Chair Powell. I would say that for sure there's a few developments that are emerging globally. We are seeing, for example, some expectations of trade negotiations, trade potential resolutions, if we want to push it that far, from the Trump administration, which is creating a bit of a kind of positivity in risk markets. But yes, of course, we have actually seen, some, I'd say, minor improvements in some of the U.S. data, holding up, such as, non-farm payroll. So I think there has been a whole combination of things that have actually led to, a kind of repricing from 43 cuts. Is this correct? Well, I think, at least from Nomura U.S. economics point of view, we are only expecting one cut from the Fed this year. But I'd say clearly there are some asymmetries around this. If the deterioration around the U.S. economy emerges faster, then there is actually a risk we could see markets pricing in more.
Yeah, but equally, there's perhaps upside risk because of positive steps taken on the trade discussion front, with China and U.S. now speaking directly in this upcoming weekend. What do you think would happen to the USD if you start getting more and more positive news on trade deals and further exemptions and further constructive conversations between the U.S. and its trading partners around the world?
Yeah, sure. Look, we've had, this kind of U.S. exceptionalism fading view kind of, building out and the dollar selling off on the back of this. And then part of this is from, Trump administration's approach around trade and non-trade policies. So clearly, if we do have, some improvements coming through around the trade front, then, there is some scope for a little bit of retracement in terms of this kind of sell the dollar theme. For sure, within the G10 space, I would expect this to be kind of playing through a little bit in terms of, let's say, dollar versus yen, maybe euro dollar a little bit lower on the back of this. But I think what's very key for me is, is there really a resolution? Are U.S. effective tariff rates going to be coming off a lot sharper than people expect, or actually will it still remain notably elevated and obviously pose downside risks to the U.S. economy? And the last point is very important. It's around this U.S. exceptionalism fading theme. I would just highlight there are many long-term investors that are reassessing, the investability in the U.S. under the policies that are coming out from the Trump administration. So there is still that view there. There's still the risk around overweights in the U.S. beginning to fall off. And of course, the implications of that for the dollar. Yeah.
So structurally, there has been rampant speculation in the last week that there has been selling out of Asian insurance accounts, lifers, of their dollar asset positions. Is that backed up by flows? And if that is the case, what indication do we have that these selling flows are going to subside anytime soon?
Look, I would say, the evidence that we've seen around this is that there certainly has been a little bit of selling coming through, whether it's from the Taiwan side, whether it's from Korea, even to some extent, Japan, mainly on the bond front, U.S. dollar, U.S. Treasury side. But I would not push it too far to say this has been extremely active. It does look like there has been a consistent trend. There is some selling coming through. But I would think that the bigger risk here is around the FX hedging that could come through from life insurance companies, from real money asset managers around the region as well, that, this can be a faster if you want to say, policy execution to sell the dollars versus that of actually trying to substantially reallocate out of the U.S. On an asset basis.
Yeah, interesting. Craig Chan, head of global FX strategy at Nomura. Wonderful to have you with us on the show today. Thank you. Now, coming up, President Trump is promising more information on a potential new proposal for a Gaza hostage release and ceasefire. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Pakistan says it reserves the right to retaliate further after India launched what it called targeted strikes on terrorist camps in Pakistani territory. Pakistan's army says 31 civilians were killed in the deepest breach of its territory since the two countries' 1971 war. India, meanwhile, says it conducted a precise and restrained response that was designed to be non-escalatory in nature. And President Trump is promising more information over the next day on a potential new proposal for a Gaza hostage release and ceasefire. The White House has been pushing for progress on a deal for Hamas to release the remaining hostages as Trump prepares to head to the Middle East next week. Bloomberg's Dan Williams joins us now. Well, Trump quite literally said, we will know something in the next 24 hours. I don't know if that's wishful thinking on his part, but is there any hope at all that a ceasefire can be agreed to? And we have been speaking, you and I, the last couple of days about how the talks around the ceasefire have essentially stalled in the last few weeks.
That's correct. President Trump is nothing if not a showman. He's also a statesman who likes to say that he keeps his word. So I think it's worth taking seriously what he said. There's something of a passive verb there. It suggests he's waiting for news. So it could be that his mediators, it could be that Qatar and Egypt, who have mediated past truces, are trying to mediate a new one, will have some news. I think it's too early for optimism. The Gaza crisis is definitely a thorn in his side in terms of Middle East statesmanship, certainly a few days before he comes into the Gulf. There is really nothing suggesting that could be near a solution, a resolution, even a ceasefire, given that the sides are pretty hard to reconcile at this point.
Is it your understanding, Dan, that what we're going to get out of the Trump visit next week will likely be perhaps more focused on business deals as opposed to some of those massive geopolitical breakthroughs that, you know, he might have been hoping for, whether it's Gaza, whether it's Iran-US, a nuclear deal agreement, or even further announcements on the Houthi side? I
think certainly the president is, by his own claims, he's a businessman, a successful one. He's looking out for the U.S. economy. As our colleague Sam Dagger reported yesterday, even the deal with the Houthis, what appears to be a truce between the U.S. Navy and the Houthi rebels of Yemen, which was sealed this week, that appears to have had a short-term aim of simply clearing the decks, as it were, before Trump's arrival here, to have some quiet around so he can focus on the business angle, the defense ties. However, he will also probably talk about the Abraham Accords, which he championed, which he forged in his first term, which would envision Israel being more engaged by US-aligned Arab powers in the region. So it could be there will be a diplomatic aspect there, maybe even something that touches on the Gaza crisis.
Yeah. And just to round things up, because you mentioned the Houthis in Sam Dagher's piece yesterday, his article, but he said we had a good outcome with the Houthis. They're going to honor their commitment. But as we spoke about yesterday, this was specifically their commitment to stop attacking vessels. What has the reaction been in Israel to this?
Well, just a few minutes before this broadcast, the Israeli defense minister amplified past warnings against the Houthis to desist from attacking Israel. He even hinted that Iran could be Israel's target for retaliation in the future for Houthi attacks, given the links between the Houthis and Iran. There were apparently 1 or 2 launches yesterday by the Houthis against Israel. Israel has not amplified that, perhaps understandably. I think there is some hope that even if the Houthis formally, de jure, are not entering a truce with Israel, de facto, they will also calm that front as part of their deal with truce, at least for the coming week.
Yeah, okay, let's see. It's a major week coming up in the Middle East. Bloomberg's Dan Williams, thank you so much for the reporting. All right, coming up, we hear from the CEO of the Moroccan Stock Exchange as it launches a derivatives market. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The CEO of Morocco's Casablanca Stock Exchange says the launch of a derivatives market will complement the main board and bring about a new wave of trading. Tarik Senhaji told us more about potential IPOs, accessible exchanges, and investment in the country.
We are very excited by this new announcement, new derivatives market, the second in Africa. It's something to cherish, and we are particularly Excited because there is a wave of optimism, there is a wave of dynamism which has been driving the stock exchange over the past 2 years. Volumes are massively up, price performance has been very good. So the primary market is doing very well, our main market is doing very well, and the derivatives market is going to complement it and bring a new wave of trading, a new wave of dynamism. As you know, the main market is a cash market only. It's long only as well. So by introducing this new generation of instruments, we allow many new things to happen.
Well, and you talk about the volume of the exchange and also the companies. There haven't been a ton of IPOs that we have seen with the Casablanca exchange at this point. How do you assuage investor concerns that potentially they're getting a little bit too ahead of themselves? I mean, when will we start to see this sort of pickup that you're envisioning?
Essentially for our market, and that's what made the difference over the past few years, it was about quality, not quantity. The quality of the companies that have come and IPOs in our market are fantastic not only because of their business model, but also because of the investment teams that they brought. So if I look at the last IPOs that we've had a company, healthcare, from healthcare, providing healthcare services. It performed extremely well. As you know, came with an IPO and came back 18 months later with a capital increase. Fantastic investment team just after COVID, as you can imagine. Another company we just IPO'd a few months back was a water management company. And as you know, African countries face a lot of issues about water management, in particular within droughts environments. So that's something that was extremely well received by the market, 37 times oversubscribed, the highest number of individual investors for the past 15 years. But also we haven't performed only on the primary market. We've got fantastic companies who have come with an IPO-like product.
That was the Casablanca Stock Exchange CEO, Tarik Senhaji, speaking with Bloomberg's Jennifer Zabazaja. Turkey's state-owned Halkbank has asked the U.S. Supreme Court to consider tossing out criminal charges, accusing the bank of helping Iran evade economic sanctions. Prosecutors allege Halkbank helped free up $20 billion of restricted Iranian funds and laundered at least $1 billion through the U.S. financial system. The appeal centers on whether Halkbank is immune from prosecution under common law, but analysts predict that's an uphill climb unlikely to succeed and see a potential settlement with the Trump administration. And a quick look at equity futures reacting to positive discussions taking place between the U.S. and China. Trump talking about a potential trade deal announcement later this afternoon, a report suggesting maybe with the U.K., and also reacting to the Fed yesterday, steady as they go. So S&P futures up 0.7, NASDAQ up 1%, European markets up 0.8. Coming up, as the Middle East readies for President Trump's visit next week, we discuss the agenda with Dalia Fahmy from Long Island University. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Big deal. President Trump teases a major announcement later today, expected to be a trade deal with the UK. Chip flip. Sources tell Bloomberg the Trump administration plans to rescind Biden-era AI chip curbs and won't enforce the so-called diffusion rule, which takes effect next week. And no rush. The Fed holds rates with Chair Powell, making clear that they won't be pushed into lowering borrowing costs. Meanwhile, the Bank of England is expected to turn dovish and cut later today. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. A lot of green on the screen today. Markets are trading with a risk-on bias, and that is on back of, well, I would say a lot of the positivity coming out vis-a-vis China-U.S. trade talks. They're set to start speaking over the course of the weekend. The Treasury Secretary, Scott Bessent, is going to be there meeting with his counterpart. So positive news on that front. Also, a Bloomberg news story that came out last night suggesting that the Trump administration is thinking of dialing back some of those chip curbs. So that's been very positive for the tech space and specifically for those chip makers. That's why the NASDAQ is up so much today, up 1%. And then the Fed, almost an afterthought at this point, but still very significant, suggesting that there's still a lot of uncertainty out there. Inflation levels is still quite high, and therefore not really wanting to commit to an aggressive rate cutting cycle at this point. So those are the takeaways from the Fed. You can see the USD is slipping a little bit this morning, down 0.1%. And then two-year yields trading at 3.8. We've got about 75 basis points of rate cuts priced in for this year. Flipping over, though, today's a big day for central banks. We've got the likes of Norges, Riksbank, but then also the Bank of England is going to be in focus as well. The market is fully pricing in a rate cut at today's meeting, but attention will be on the vote split, whether anyone's calling for a 50 basis point rate cut, and of course their growth and inflation forecast as ever. There's about 90 basis points of rate cuts priced in the UK curve for this year, so almost 4 cuts priced in. Now, a 3-day Russian-declared ceasefire in Ukraine has come into force as the presidents of China and Brazil arrive in Moscow for commemorations marking 80 years since the end of World War II in Europe. For more, let's bring in Bloomberg's Tony Halpin. I don't know if there's significance, of course, that they're there for V-Day, but what are we expecting, if at all, out of President Xi's trip to Russia? And does China have any role to play in terms of negotiating the ceasefire that the whole world has been looking for between Russia and Ukraine?
Yes, President Xi Jinping arrived yesterday in Moscow. It's the beginning of a 4-day visit to Russia. He's meeting and will hold talks bilaterally today with President Putin. They'll discuss the war in Ukraine for sure. They'll discuss relations with the US. China, of course, has been critical in helping Russia to resist the impact of economic sanctions over the war. It's taken Russia's side in many ways, even though it's tried to present itself as a neutral arbiter. It doesn't really have much credit with Ukraine, but at the moment, I think anyone is looking for some kind of international leverage to bring the two sides to the negotiating table, and people will be watching to see what Xi Jinping says about the Ukraine situation, given Trump's efforts to reach a peace deal.
And of course, this unilateral ceasefire, I say it's unilateral because Russia announced it, has gone into effect from midnight. What are we likely to see out of the Ukraine side in response to this ceasefire announcement?
Yes, Putin declared this 3-day ceasefire, took effect at midnight. Ukraine did not commit to that. They said that they would be willing to sign up to a 30-day ceasefire and challenge Putin to do so, but effectively they said that this 3-day ceasefire was Putin's way of drawing attention to his military parade that will take place on Friday. We're watching to see whether or not there are drone attacks on Russia. Yesterday, Russia and Ukraine exchanged considerable amounts of drone fire on each other's capitals. That delayed, for example, flights into Russia carrying world leaders.
Tony, is there a sense, and you've been covering Russia for so many years now, but is there a sense that the Trump administration has been so busy with other parts of the portfolio, with tariffs, with trade talks, with the upcoming trip to the Middle East, with Gaza, that some of the focus on Russia, Ukraine, and securing that ceasefire has moved to the wayside?
Yes, I think so. I mean, there was a real head of steam that built up in the early weeks of the Trump administration to try to get a deal done. Trump himself said he wanted a deal done within the first 100 days. That deadline has passed. Some of the momentum has faltered, and we're not quite sure yet at this point where the talks go from here. It's very much, I think, in Russia's court from the US point of view to make an offer. They think they've made an offer that Russia should accept. Russia so far is resisting that, and we don't yet know where the next stage of these talks will go.
And has the emphasis of these talks perhaps shifted away from securing a temporary ceasefire towards working towards a more comprehensive peace plan, do you think?
Yes, that's what the US wants. Initially, they wanted this 30-day truce. They've been shifting to demands for a longer-term cessation and for Putin to sign up to a deal to end the war. Russia has been resisting that, and the war has gone on. We have this 3-day window now, which Putin has announced. Ukraine hasn't committed to that, though we might see, I think, some lull in the exchanges of fire simply because they don't want to attract too much opprobrium of any kind of interruption or threat to world leaders. But still, the fact remains that there is no agreement to halt the fighting, and time is ticking on.
Yeah. Tony, thank you so much for coming on. That was Bloomberg's Tony Halpin walking us through the ceasefire that has just gone into effect. Unilateral ceasefire, should be said, Russia announced over the next 3 days. Now, Reuters reports that Ukraine is starting to consider a shift away from the U.S. dollar to using the euro as its reference currency. The report cites an email from the central bank governor saying Ukraine's EU membership ambitions and global trade fragmentation are amongst the considerations. Ukraine's national currency was launched in 1996 using the dollar as a reference currency. Now, a top Singapore diplomat has warned there's no clear roadmap to improve ties between the U.S. and China in disputes over everything from trade to Taiwan. Ambassador-at-Large Chan Hang-chi is a former envoy to the U.S., and she told us that the speed and scope of President Trump's policy changes has been a shock.
President Trump candidate Donald J. Trump ran on the promise of disruption. And he laid out all the policies that he said he would do, and he did exactly that. But still, I think most of us were shocked, and some were awed. Why? I think it's because of the speed in which things have happened, the speed, the scope, and perhaps the extent. And that has really surprised everyone.
If you take a look at Europe, it is building its own defenses, it's increased its defense budget, for instance. If you take a look at South Korea, it's thinking about going the nuclear way. How are you looking at whether or not these countries will undo the measures that they're adopting at this point in time?
I don't think many of America's allies and partners see America as a foe, even though they are very uncomfortable with what the United States, the policies seem to be portending, the tariff war and so on. What do countries do? They try to bargain, talk their way out, see whether you can land at a different space. Because President Trump has been unpredictable, there's reciprocal tariffs and he pulls it back 90 days and so on. So the question is, in the end, who is the target? Are all these countries target, or is it just targeted at China? And countries are doing different things. But it is true, you are right. In terms of defense, President Trump has in fact indicated that he wants to deconstruct the order that America has created, that countries should not expect a free ride on American defense and assistance. And in a way, we have been free riding, so countries can expect to pay more. I think that will happen. And so there's some adjustment there. But I think you see hedging. They're not foes, but they'll hedge. They hedge in different ways.
You talk about hedging. Does hedging involve getting closer to China? Have you seen that? Do you expect that?
Hedging well, countries at the moment is only 100 days. All right, and people are
quite a good indication of what can be expected in the country.
Yes, I think but there are many countries that are still just trying to deal with the tariffs immediately. They haven't moved to the next phase yet. So, and it seems now, if you look over the 100 days, the countries that dealt or are dealing with President Trump, the United States, with some calm and in a collected, poised way, seem to be having some effect. Show strength and you'll be respected. So there's a bit of that. If you look at the cases, Mark Carney, Claudia Sheinbaum in Mexico, so countries are remaining slightly calm. And President Trump, he listens and sometimes he changes his mind. So that can happen. So coming back to your question, then what will they do, So I think in terms of whether they will move towards China immediately, there are signals. China is talking to Europe. Europe is talking to China. What I think has changed most is that what President Biden did, which was to collect all the countries in Europe, gather the Europeans in a kind of coalition, a loose coalition, to balance China, to counter China. I think Europeans are now not going to go there.
That was Singapore's Ambassador-at-Large, Chan Heng-chi, speaking to Bloomberg's Haslinda Amin at our New Voices 2025 event. Now, coming up, the Bank of England is expected to cut rates today as global risks rise. We are live in London with all the details next. This is Bloomberg. The Bank of England is expected to cut interest rates by 25 basis points today, with the economic outlook dramatically changed since its last meeting in March. The central bank may even signal another move is likely in June as it responds to President Trump's global trade war. Bloomberg's UK correspondent Lizzie Burden joins us now. Lizzie, it looks like it's going to be an exciting one because the market is primed for an interest rate cut out of today. But as ever, the devil is in the details, and maybe that vote split is going to be in focus as well?
You're absolutely right, Jemana. The Trump cut pretty much nailed on because of this growing consensus that Donald Trump's tariffs are going to weigh on UK growth and inflation. So, as you say, the focus turns to the signalling around the decision. And yes, the vote split probably likely to give us a dovish hint, even though Governor Andrew Bailey's told us it isn't a communication device. 20 out of the 32 economists we surveyed reckon that at least one member of the Monetary Policy Committee is going to vote for a jumbo cut. And it'd be notable if it isn't just the Archdove Swati Dhingra, but maybe the Deputy Governor, Dave Ramsden. He's got form pivoting the committee. Maybe it's Alan Taylor, the newest member of the Monetary Policy Committee. It would inevitably be taken as a dovish signal if more than one of them went for that. But also we look at the guidance. At the moment, they're describing the path ahead as gradual and careful. Careful because they needed to take account of the economic impact of Trump's tariffs. If they drop that, it might suggest that the balance of risks is tilted towards a slowdown in growth rather than more inflation. And if they drop gradual, as you suggest, maybe that opens the door to a June cut, which would be the first time they've done that since COVID and before that the financial crisis. So a very different tone potentially from the Fed today than from the BOE today from the Fed last night.
Yeah, I guess in the past, gradual sort of meant, every other meeting or only at forecast meetings. So if they do drop that, then maybe it does make June live. But earlier today, Trump was also suggesting that there's going to be a big trade announcement coming up. And according to our own reporting, it looks like that may be a trade deal to be announced between the UK and the US. Significant, Lizzie, but also because it does actually impact the UK's growth profile. And I wonder how that may also be represented at the Bank of England meeting today with their forecasts.
Yeah, we've been looking at this all week and sources telling us that a trade deal was looking close. We've got this tweet, this True Social post, I should say, from Trump saying, big news conference coming today concerning a major trade deal with representatives of a big and highly respected country. And of course, we know that Keir Starmer has prioritised trying to mitigate these 25% tariffs on steel and car imports. And we've already seen this UK-India trade deal announced on Tuesday. So, yes, this would help to mitigate the growth impact to the UK, which is, of course, as you say, important for the Bank of England. But look, the UK is still in the context of all of this trade war globally. There'll still be potentially lower oil prices. You could still see cheap goods flooding Europe and the UK included because China wants to circumvent its own 145% tariffs. And, it may be that Donald Trump doesn't excuse the UK from all aspects of these tariffs. So there may yet be a growth impact on the UK, even if we get a big deal announced today, Jemana.
Yeah, that certainly appears to be the case with the economists' forecast for the UK economy, with or without that trade deal. Bloomberg's Lizzie Burden, thank you so much for the preview. Okay, let's turn back to this region, the Middle East, which is readying for President Trump's visit next week. He will be visiting Saudi Arabia, Qatar, and the UAE from 13 to 16 May, with investments and economic cooperation top of the agenda. To discuss further, we're joined by Julia Roknifard, a senior lecturer for the School of Law and Governance at Taylor's University, Malaysia. Well, Julia, good to have you with us on the show. Let me just start off by asking you, do you have high hopes of what President Trump may announce on his whistle-stop tour through the region next week?
So far, it seems that President Trump was not able to succeed this major policy win that I think he so desperately needed, that was featured prominently in his election campaign among the promises. And we are past 100 days since the start of his presidency. So Ukraine, for one, the Ukraine crisis, he was not still able to wrap this up. And that was the hope, I think, to wrap up with Ukraine and then get over with the Middle East, whatever is going on there, and switch to the China agenda. And Trump was mostly obsessed with that issue. However, it didn't go as planned. And this visit is a kind of an attempt to secure this foreign policy win with the deals, the possible deals that you mentioned, and also with brainstorming with the regional countries on how to end the crisis in Gaza and probably how to reach to the result in Iran negotiations.
Yeah, all of those on the table. How significant do you think it is that President Trump chose the GCC as his first destination, as a first official foreign state trip? Is there significance to that decision?
Yeah, of course. The GCC, since decades ago when it was just founded, it was a reliable ally to the United States. And during his first term, President Trump also liaised with the GCC countries quite a lot. So I think there are hopes and expectations, especially from those reliable partners within the GCC, such as GCC lead Saudi Arabia and United Arab Emirates, which among them, one of them joined also the Abraham Accords, and the other one, Saudi Arabia, was potentially willing to join the Abraham Accords before the 7th of October 2023. Besides that, there are some other developments that are going on around the GCC. For one, at the end of this month, at the end of month of May, we have ASEAN summit scheduled, and together with it, it's ASEAN GCC China summit, which promises to be quite a big thing to not only ASEAN as a region itself, but to the GCC. So maybe he would like to tap as well into what GCC is planning with regards to cooperation in this region with ASEAN, and sort of steal this primacy in the relationship with the organization.
It's interesting you bring that one up because the ASEAN GCC summit is flying a little bit under the radar, but of course very important and significant, especially as you think about the Middle East and specifically the GCC's positioning as sort of the middle of the East and West. And I wonder how challenging it's going to be for some of those GCC nations to continue to have good relations with both in an environment where U.S. and China are in the midst of quite a heated trade war.
Yes, and I think they try to actually play that card to their advantage, to position themselves as they're trying to benefit their national interest. And I think they tried to make it clear to Trump, although with the diplomacy that ensued, so it was done in a diplomatic manner. But I think they are going to be maybe less lenient in whatever Trump wants to talk to them about, because they have China sort of having their back, and not just China, but it's organized by ASEAN and China together. So everybody's promoting this as a next big thing, as a global South getting together and having its own agenda, and where the interests are quite aligned vis-a-vis the ongoing crisis in the world, including the one in the Middle East. So I think they will just try to play this card instead of, putting themselves in an uncomfortable position and feeling uneasy. They will turn it to their advantage.
Julia Roknifard, thank you so much for coming on our show today. A preview of Trump's visit to the region next week. Senior lecturer for the School of Law and Governance at Taylor's University, Malaysia. Now, South African President Cyril Ramaphosa unveiled the second phase of a reform program aimed at firing up the sluggish economy. Average annual growth has been less than 1% over the past decade, and that comes as the Bureau for Economic Research lowered its growth forecast to 1.5% for this year from a previous projection of 2%, citing domestic political instability and U.S. President Donald Trump's tariff war. It's showing up there as well. For more, we're joined by Jennifer Zabazaja, our Africa correspondent in Johannesburg. Talk us through this latest tranche of reforms, because of course Ramaphosa introduced the first round of reforms back in 2020. How are they intended to boost economic recovery in South Africa?
Right, Jumana. It's important to note that this was launched initially back in 2020, and the president on Wednesday was pointing to the fact that this was an opportunity back in 2020 to accelerate some of these reforms that the country had long needed. This second phase, in his words, is intended to focus in on more of some of the issues that have really bogged down this economy. He pointed to some of the successes of this program, which is called Operation Vulundlela. He says that because we have seen progress in terms of the electricity stagnation and shortages that were here, that is a signal that this operation is working. Now, this next phase is intended to focus in on the water crisis that we've seen here, and specifically on what he called dysfunctional municipalities. And so a lot more investment is going to be channeled into municipalities, hopefully driving digital technologies to make the economy more efficient and provide what he says low-income earners with better access to economic opportunities. Now, of course, we have to note, as you did just signal right there in your intro, we have seen stagnation and slow growth in this economy. So many people, when this was first unveiled on Wednesday, were actually surprised and saying, you know, what is this intended to actually do? Because we haven't seen the sort of growth that this economy really needs to see. But as we heard from the president, this is an opportunity to increase investment after years of underinvestment, to focus in on state-owned land and buildings that have not been functional. And perhaps then we will start to see even more progress, potentially even coming in the budget that we're expecting in just a few weeks. Budget 3.0, as I should put it out there.
Yeah. And Jen, just as I was linking out to you, I think, you know, it's notable that South Africa's growth has underperformed. It's only averaged around 1%. Is this actually going to increase or influence the short-term economic growth profile?
That's the concern here, Jumana, is that if we don't actually see capital being raised, investment really being channeled into this economy, potentially then we won't see that progress. You were mentioning there the Bureau for Economic Research that actually revised down their projections for the economy, but the government insists that this is an opportunity. And when we do get this budget from the National Treasury, I should note they are also partners in this initiative with the president, potentially we'll get even more, hopefully, positive prospects for growth moving forward. So the key will be on May 21st when we do get that budget about how this program will work into the broader economic recovery of the economy.
Yeah. Thank you, Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Quick look at equity futures. Lots of green today. Markets leaning towards a risk-on session. This after digesting the Fed and, of course, positive murmurs around U.S.-China trade talks. I'll leave you with that. But that was it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.